What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 22nd of 2018. Well, folks, I hope you all are having a great day wherever you are. Today, I want to spend a little bit of time to try to answer a few questions that I got on my most recent video. As you all might know, if you're frequent viewers of the Data Dash channel, I recently did a video talking about how I'm going to be investing and trading in 2019, and I really talked about switching from the risk-on narrative of the past 10 years in U.S. equities or U.S. stocks and going more towards safe hedging positions such as commodities and cryptocurrencies, a bet against the traditional markets and traditional currencies out there in the world. But a lot of people who watch my channel already know how to get involved in cryptocurrencies. And for those of you who don't know, I'll have a video linked down below. It's one of my first videos that I put on the channel. I think it would be a really big help for those of you who are just getting involved in crypto. But today, I want to focus on getting involved in commodities. A lot of questions came up in that previous video. Many people asking, Nick, should I buy physical for gold and silver? Is there different financial products that I can invest in? What's going to bring the best return? What's the best for me personally? And it's hard to really do that one-on-one with you guys. So I thought I'd spend some time, cut out all of the noise, and really focus in on the different options that you have to invest in. A few of the key commodities that I think people want to trade at the given moment or might bring opportunities in the market. So anyways, let's go ahead, let's dive into it and go through our list of options here. So I'm going to bring up this pad here. It's an online drawing pad, and I've got a little list here of different ways you can invest in things. But before we dive into anything, we're really going to be focusing in on three commodities: gold, silver, and uranium. Now, I know there's a lot of you who might be flipping out right at the start here that I've only got an ETF, individual stocks and futures contracts. For gold and silver, I want to let you all know that on a personal level, this is just me personally, I like to own things physically. So in this case, if I can own gold and silver physically, I'm going to try and do it. I have not made any major purchases yet of gold and silver. I do have a little bit of gold that I got gifted here from one of my good guys who works in the commodity space. However, in this case, I want to let you all know that you can go out to a variety of different companies. There's JM Bullion. I know there's Schiff Gold, for example, Peter Schiff, who runs that. And then I think APMEX or whatever as well. There's dozens of different physical bullion, gold and silver producers that you can go and purchase through. But today we're going to be talking about the different financial kind of products that you can invest in as well. So if you're willing to take that risk of trusting a third party, this is something that's better probably for traders, people who are looking to hold something over the next few months or the next few years and not really long term to store their value. So this video is more for that. But again, you can always go through and get the physical product yourself. Now, let's go ahead and talk about gold and silver first, primarily. Gold and silver are probably the most well-known commodities in the world outside of oil. And they're really seen as these kind of vehicles to hedge against traditional markets. When markets get volatile, when there's hyperinflation, gold and silver usually tend to be the commodities that people run to. So let's go ahead and take a look at the first one here. In regards to gold and silver, there are dozens of ETFs or exchange-traded funds, basically either pegged ETFs that follow a certain value of an asset or a commodity, or there's a variety of ETFs that basket certain companies together. So in this case, we have the first one here being the SPDR Gold Shares ETF, GLD, and also the iShares Silver Trust, SLV. These ETFs are different ways where you can simply purchase an ETF and practically trade the price action of the underlying commodity in this case. So as we can see here, on this ETF here, the price action mimics exactly with what we see with gold. It's only that you're going to see less movement in the price action because, again, comparative to gold's price here, which is trading on a more frequent basis, an ETF is only going to be really tradable for the average individual between stock trading hours in this case. But again, you're pretty much trading the exact same price action here. And the same goes for SLV here. SLV is a very convenient way as a trader where you can get a position in silver that mimics, again, the price action of silver. So again, this is a really, really simple way for you guys to get involved, but you can also get involved in owning ETFs with the miners of silver and gold. So you've got, for example, Van Eck, who provides both a gold miners ETF and also a junior gold miners ETF for a little bit of the smaller gold miners in this case. Now with the gold miners ETF, you're going to get probably a more stable, more, I would say, well-established set of companies in the mining space. And if you guys want to learn about these ETFs, again, they will list their holdings online. So you can go to VanEck's website, or you can go to Global X, who makes a lot of ETFs as well, and check into what miners are backing in these different ETFs. Now, for individual stocks, I know many of you out there like to do your research and find the specific companies that you want to put your money into. I completely think if you can put the time into it, it's well worth it. But there's some really cool lists online. I've got a link that I'll have down below, actually 2 links that I'll link down below from Statista, who has a link of all of the bigger gold miners by market cap. So you've got companies, well-established companies like Newmont, all the way down to even some small mid-cap companies like Evolution Mining and IM Gold. So you can go down and, again, learn about some different mining companies. And if you want small caps, guys, there's ways you can scan out there for higher risk gold miners for maybe better returns. Again, you've got to make that decision for yourself. I'm going to try to point you guys in probably more of a safer direction, but this is, again, not financial advice. You got to choose what companies you like. And there's also another scanner here as well, where I've got it listed by market cap. I'll leave this down below for you guys, where it's a list of the largest silver miners by market cap. And again, in this case, you'll find that a lot of these companies overlap. Some of them are more well-established, like BHP Billiton, as well as Freeport-McMoRan. But you've also got some things that are specifically silver and might be a hybrid between gold and silver as well, or just generally massive commodity producers. So you got to do your own research, pick which ones you like. Ones that are more specifically exposed to silver will probably outperform those of the general commodities market if you think silver is going to do better than other commodities. So now that we've talked about individual stocks and ETFs, I want to let you all know where you guys can trade these, right? Many people are wondering, okay, how do I get engaged in this? I've never traded stocks before. If you're trading ETFs or stocks for the first time, you have to get a brokerage platform. Now, for those of you out there who were like me when I got started, I was working with, and I still do to this day, I don't really have a massive ton of money, and I'd still prefer to use it when I start to move into equities and commodities over time. There's great platforms like Robinhood, for example, that are commission free and allow you to get access to all of, from what I know, all of the ETFs we listed and a variety of gold mining companies. And again, I'm not going to try to put you guys through some referral program. I'm just letting you know Robinhood does that. But along with that as well, there's well-established brokerage platforms that will charge commissions like E-Trade and Scottrade. There's all types of different platforms out there. It's just a matter of setting up the account and going through the account approval process. So I'm not going to cover that in this video. It's quite self-explanatory. Just if you go to the websites, they'll help walk you through it. In the case of futures contracts, though, there are a variety of different futures contracts that you can use to trade on these different commodities of gold and silver. I'm not going to go into too much detail, but these are run by the CME, obviously. So you have to get some kind of brokerage or exchange that allows you to trade these futures contracts. And for those of you who don't understand futures contracts, there's plenty of resources online explaining it. It's a great way for people to, again, kind of guarantee. A lot of companies use futures contracts to guarantee a specific profit that they're going to be making on their commodities that they're mining. But along with that as well, and they use it for farming as well, for agriculture commodities. But long story short, you can use futures contracts as a way to potentially make money in regards to trading these. Again, for the average investor, I don't think really most of you want to trade futures contracts, but it's an option out there. So you've got it for gold and silver through the CME, and they've also got a variety of other commodities products as well. So again, if you're interested in futures, you can definitely do that as well. Going on here, though, I want to talk about uranium. This has been one that I've been talking a lot about on my channel, and I just had to fit it in because a lot of the questions I had actually had to do with uranium. I've been talking about how I'm really excited about the space of uranium. Again, you guys got to go out there and do your research and see if you see what I see. But I think that this space is going through a multi-year macro cycle, and there could be some interesting movements here in this space. So I want to spend some time to talk about a few of the different ways that you can invest in uranium. So it's a little bit more limited. Sadly, you cannot own physical uranium. I don't think you guys want a big, yellow barrel in your room. I know many people have the stereotypical image of that, but I don't think any of you would anyways really want to hold physical uranium. Anyways, you can't unless you are working in the field or obviously, working with the government in some way. So there are a lot of other ways where you can own uranium, luckily, and be able to benefit from hopefully the increase in optimism or price action or value of the market. The first one really being a well-known mainstream ETF. And there's a few uranium ETFs out there. A lot of them, though, are not very liquid, meaning that there's not much volume trading on them. So it's probably best if you're going to be looking at ETFs, again, you got to decide for yourself if you want to invest in it. URA, or the Global X Uranium ETF. Now, this is what I use a lot when I talk about uranium markets. URA, again, I've been talking about how it's been in a multi-year trend over well over 2 years, where it's been able to hold this line of support. It's getting lower levels of resistance, and is really building into what's known as a wedge. Again, I've talked about this before. If you guys want to learn more about it, just stay tuned to the channel. And I've also got a newsletter that I'm working on right now where I'll be talking about how I'm trading uranium markets. But URA, to put it simple, guys, is basically one of the more well-established ETFs out there that gives you a broad exposure to the uranium market. So first off, this is, for example, again, you can go look up online what these ETFs hold. And again, they're always changing over time. They move different assets in and out, and they try to make sure that it's an ETF that's optimal for those who are investing in it. So the biggest thing, for example, more than 1/5 of the ETF is Cameco Corp, which is one of the largest uranium miners on the planet. It's not the largest, but it is definitely up there. And you've also got large companies as well, like NextGen Energy, which has a huge amount of land of uranium that's untapped at the moment. Small cap that's really been building up over the past year or so. And then you've got a lot of other companies like Uranium Participation Corp. But then you start to break down into a lot of different companies that aren't just simply miners, not directly exposed in uranium, and play a part within the broader uranium sector, or the nuclear sector in this case. So again, in this case, you're getting a very kind of, I would say, comparative to investing in a specific company, you're getting a more safe play here, because you're getting a distribution of a lot of different companies, some of which are not directly exposed in uranium. Some could be, again, more like GS Engineering Construction, Hyundai Engineering Construction. You've got, again, people who might be helping to build reactors or build these mining facilities, but are not directly specifically tied to the niche of uranium. They could be in a broader sense of different markets. So again, you can go through, you can download the full CSV file, open it up in Excel or Google Sheets, see what companies are in here, how much they're holding, and assess it for yourself if you think that the ETF is a good buy at this case. Along with that as well, you can invest in individual companies. Now, you get a little bit more limited with companies as well when it comes to the uranium space. Some of them are traded on foreign markets and could be hard for average retail investors, meaning people like you and I, just kind of average everyday investors rather than the big institutional guys, in regards to the options that we have or that are able to be traded. Cameco, as I mentioned, is one of them. You've also got a small cap that's grown pretty popular. I'm really a big fan of the CEO at this company, Uranium Energy Corp. And then NextGen Energy, as I talked about earlier. These are some of the small caps and mid caps that you could definitely look into. And then you've also got some smaller, riskier companies. You've got Energy Fuels Inc., UR Energy, Denison Mines, Uranium Participation Corp, and then also as well Westwater Resources. So you've got, again, a broad selection of different options here still, even though you're tied to a few of these. And again, guys, not recommending any of these specific companies. You got to do research on these. You got to look into see which ones you like, which ones have good fundamentals, which ones are, are they contracting their mining operations in this kind of market where spot prices are low, or are they expanding, taking on the risk that hopefully markets are going to recover, and then we're going to see spot prices increase. Again, it's a determination on what you feel is best. But again, Cameco is probably one of the more well-established companies in regards to market cap, revenue, and operations. So again, you can look through these different companies and decide for yourself. And again, I'll be talking a little bit about which ones are interesting me in the newsletter in the future, and possibly a little bit on the channel as well. And last, you've got one type of futures contract that you can trade here, and that is the UxC Uranium U3O8 futures contract. Now, to go on here, U3O8 is a chemical compound that is tied to uranium in this case. Again, it's just the chemical compound you're trading on the futures contract. Here's the actual one here. Again, it's run through the CME, so you have to get an exchange to allow you to trade it. Guys, I really don't think for the average investor you're really going to want to look into these, but again, you're welcome to, and you have to determine for yourself if you believe futures contracts are the way to go for you. But I really think that as much as it's the only way to invest directly within the commodity itself, from my knowledge, you've got a wide band of companies that will improve over time if uranium prices go up, most likely. So, you got to assess which ones you want to do. You would trade the URA ETF as well as these companies on a brokerage platform, much like you would with stocks or the ETFs for gold or silver. And I know URA is able to be traded on Robinhood and pretty much any brokerage platform that I've used. Some of these down here, some of these smaller cap miners might not be available on something like Robinhood, and you have to find a brokerage platform that'll give you that flexibility. A few other things that I thought I'd point out as well in regards to uranium markets. One company that I didn't list is Kazatomprom. And when we're talking about large uranium miners, we're talking about the largest here in regards to uranium mining. Kazatomprom is looking to do their IPO in London. And they're doing GDRs, so it's called Global Depository Receipts. And basically, with these receipts, it's a way that you can trade foreign companies. I don't know. I kind of am reading it here in this small post that just came out today, actually, from Reuters here, that they're doing GDRs. I don't know if it's going to be available in the U.S. It looks like they're saying it's going to be available in the country that Kazatomprom is based, Kazakhstan, but hopefully it'll be available in Western markets. Usually it tends to be that, or that they work out something later down the road. So you can get exposure to one of the largest uranium miners in the world, hopefully. So these are really our different options here, guys. Again, I don't really want to talk about how to trade them. That's going to be up to you. And maybe we can do a future video talking about that. But again, look through some of these different options, assess what works for you. And if you have any questions, guys, please leave it down in the comments down below. I'd be happy to help. I apologize if I rambled on a little bit, as always, but hopefully I provided all the resources you need. And if you need anything else, again, links will be down below. Hopefully you'll find some answers down there in the description. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.